Hi, everyone. This is Jason Barrick of Wall Street from Main Street. Welcome back for another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. The US dollar gold price has corrected a little bit in the last week or so, kind of head scratching why, given like all the geopolitical stuff, the Trump tariffs that are going on right now. I actually wanted to ask him about the Trump tariffs impact on gold. We'll get to that in a second. He's a former Wall Street bond trader. Also, he's a gold fund manager, and he writes two paid investment research newsletters, the Mining Stock Journal and the Short Sellers Journal. Dave Kranzler of Investment Research Dynamics, thank you for joining me again.
Hey, Jason, how's it going? Thanks for having me on again.
Yes, and a really interesting time right now. Over the last couple weeks in the gold market, we have Elon Musk talking about potentially an audit of Fort Knox, a live audit on live stream, and then the stuff with the LBMA going on right now, which we're recording this interview on Friday, February 28th, 2025. The US dollar gold price has corrected a little bit, but overall, the last like 4 to 6 months, it's rallied. It almost got up to $3,000 an ounce. Today, we're under 2,900 at $2,857. I want to ask you, though, about the Trump tariff. So the narrative going around right now is that the Trump tariffs are causing this excess demand for physical gold. Do you think that that's the case, or do you think that that's just a false narrative by the mainstream financial media and the bullion banks?
Oh, definitely the latter. I mean, why would the Trump tariffs cause an issue for the supply of gold anywhere except in the United States, right? Because if Trump was going to put a tariff on gold that's imported into this country, and I forget, I know Mexico is our largest silver supplier. I guess we import bars from Switzerland, and I don't know. I, I haven't really looked into where gold doré would come from that refineries use in this country.
Probably Canada.
But
I mean, there's a lot of Canadian dory bars.
yeah, I think it is. I think Canada is a big supplier of that stuff. But I mean, really, all that's going to do is drive up the price of physical gold for buyers in this country, right? I mean, it's not going to affect the global price of gold. Why would it? It's not like it's. I mean, there's a lot of gold that gets mined and sent to every other country in the world outside of what is mined in the U.S. So
I think I agree with you that the LBMA narrative that this is a Trump tariffs is a false narrative. That what we're seeing right now is kind of like it's like a boxing match where like one of the boxers just keeps hitting body jabs and body blows to his opponent, and then towards the later part of the boxing match, the other boxer is just staggering, walking around. I think this is accumulated damage for the physical gold market in London because look, Dave, we've been talking about this for many years. Look at all the countries that have repatriated their gold post Russia sanctions the last 3 years now, because now the Russia sanctions have been in effect for 3 years. These non G7 central banks have doubled the amount of monthly gold tonnage purchases. So this is like accumulated damage to what Germany, Poland, India repatriating their gold and the increased amount of physical gold demand.
no question about it. And that we saw way before there was any ounce of breath breathed about tariffs on gold and silver. We saw just, pricing discrepancies in London or signals. Lease rates started going higher. The exchange for physical premiums started rising way before anyone breathed a word about tariffs. So, it's a shortage of unencumbered deliverable 400-ounce bars in London. And we saw that with the Bank of England monkey business where they roll out their old geezers who are semi-senile to tell us that, well, we don't have enough loading dock space for all the lorries pulling up trying to get gold out of the Bank of England. Well, that's not what the problem is. You don't have those bars in there that belong to the rightful owners who want them back now. So,
Or with bullion banking, Dave, I mean, those bars that used to be there, they've been pulled out with either what the countries that repatriated their gold or Asian physical gold demand, where the gold ends up back at a Swiss refiner, right? And then it's recast into 4/9 kilo bars and ends up in China, and then it doesn't leave. So there's been increased demand for Asian retail investment demand the last, 18 months? I would say that's way above trend too.
yeah, no question about it. And also, don't forget, I mean, central banks lease gold bars out to bullion banks when they need bars, when they need liquidity in bars that they can deliver into Asia and India.
And speaking of India, there was a just really interesting story that came out last week, I think from the Hindustan Times, and they were quoting Swiss gold refiners. So it's not the refiners were not talking about the tariffs. They were talking about like charging premiums for actual shortages and the production difficulty to recast the bars that the demand is that strong.
I think I saw that article, but yeah, that doesn't surprise me. I mean, we've seen you know, statements released from a handful of various refineries around the world that they're going to have to start charging premiums because they can't get their hands on enough doré to refine into 400-ounce and kilo bars.
I want to get your thoughts then on the Fort Knox audit. So, do you think that we're going to actually have an audit, or do you think that it's in the government's best interest to just like delay things out or make us think that we're going to get an audit?
Well, let's put it this way. First of all, I don't know if you remember this, but Steven Mnuchin, who was Trump's first Secretary of Treasury in his first term, he visited Fort Knox and came out and assured us that the gold was there and everything was fine. So, you know, would you call that an audit? I mean, do I
That
think
was
we're going to
staged,
get a bona
wasn't it?
fide? Do I think we're going to get a bona fide independent third party audit where all of the bars are counted and reconciled with the records that are kept for that gold in Fort Knox? No, I don't think we're going to get that. And besides that, who cares? I mean, the amount of gold that's in Fort Knox right now is only about 60% of the total amount of gold that the Fed holds custody of on behalf of the taxpayers, when the Treasury.
Are you talking about like the other gold where the US government, the Treasury is also custodian for like foreign gold, but they probably didn't give it back and they probably either leased it or swapped it or sold it into the market to suppress the gold price over the years?
No, I'm talking about the alleged 8,100 tons of gold that belong to the Treasury, i.e., the taxpayers, and 40% of it has been moved to and split between the Denver Mint and what they call deep storage at West Point.
Okay. Because notice for our listeners out there, the repatriation of the gold, it's only coming out of London. I mean, the US government's not repatriating other countries' gold. It's coming what for the Bank of England, the LBMA, like the other countries like Germany and India, Poland, they're going to London to get their Russia, I think may have gotten some over the years too, get their physical gold from there in the past. They're not coming to the US and saying we want to repatriate our gold. I don't think the US would give it to them.
I don't think the U.S. has it to give it to them. I mean, we saw what happened with Germany back in, whatever year that was, 2013, I think. And they originally wanted something like 675 tons of the 1,500 that the Fed safe keeps for them, quote unquote safe keeps. And and the U.S. negotiated them down to 300 tons, and they said, "Well, we'll need 7 years to get it to you."
And I think they
They
went to
ended up
and they got it from London, right? Didn't the US say, "Oh, we'll just have London send it to you then," I think.
I don't know. Some of the gold may have come from London, but also there were reports that a lot of the gold that was coming out of I don't know, wherever they were safekeeping it for Germany, probably West Point or whatever. A lot of it was like coin melt and not in the original bars, not in the form of the original bars that Germany had sent over here, which they had sent over here after World War II because they were worried about getting attacked by Russia. And of course, when a country attacks and takes over another country, the first thing they do is take the gold. So that's why that gold was over here in the first place.
If I remember correctly, there was an old documentary on this that the gold for that the US was storing for other countries was supposed to be under vaults in around the New York Fed. So around Wall Street and the New York Fed there were vaults. So they interviewed like one of the guys that was guarding it and this was like 20, 25 years ago. I think I saw an old documentary on it.
Yeah, that may be the case. I mean, there's vault space, plenty of vault space apparently below ground in New York. Apparently, I just read an article. It might have been Ronan Manley. I can't remember who who said that it's known that the Fed that there's passageways between J.P. Morgan's vault and the Fed's vault.
That does not surprise me. Oh, you mean secret tunnels?
Yeah. Well, apparently they're not secret if people know about them. So,
Well, I mean, secrets eventually come out. I mean, there was closed door meetings with the bank bailouts, and then someone traded on the inside information that Lehman Brothers wasn't getting a bailout, right? So it was probably one of the senior bank executives at another bank that made some phone calls and said, "Buy out of the money puts. Lehman's fucked."
right.
Might have even been
Exactly.
Jamie Dimon.
That's right.
It was someone definitely made a lot of money off those bank meetings. So, in terms of the physical gold demand, I mean, last year, Dave, over 1,000 tons, I think, of physical gold demand was purchased by the non-G7 central banks. Do you expect this trend to continue even with Trump in the White House?
I mean, I don't know why a change of president in the United States would affect the amount of gold that Eastern Hemisphere central banks are buying. And India's, well, I guess they'd be in the Eastern Hemisphere, but no, I think I think that's part of the problem is that there may actually be an increase in central bank, I want to say Eastern Hemisphere central bank demand for 400-ounce bars.
Oh, so you think then that the Trump tariffs, like him threatening tariffs and saying it's just a negotiation, it'll backfire, and then the other countries, like the gold purchases, will actually increase then?
Well, again, I don't see any connection between what central banks, what the central banks that are buying gold right now. I don't see any connection between that and the Trump tariffs.
Yeah, I think the big macro trade that's been going on for a couple of years now, and really the Russia sanctions just exacerbated it and increased it and accelerated it, is that these central banks, especially outside the G7, they've just decided they're done accumulating massive amounts of U.S. treasuries, and that they're instead, like the foreign exchange reserves, their trade surpluses are going to be reinvested into gold tonnage instead.
I think that very well could be the case. I don't know. I haven't read any reports of the European country individual European country central banks buying more gold, but that doesn't mean that it's not happening.
Oh,
Yeah.
I meant the non G7, so like the BRICS countries, the emerging
Oh,
markets. So like I think that the US won't allow the G7. I think the G7 would get a bunch of nasty. The Federal Reserve Bank would say like, "Oh, Bank of Japan, oh, you're buying gold. Oh, no more currency swaps for Norinchukin Bank, which, has all these problems now." I think the CEO just resigned.
well, what I found interesting is that Poland has now repatriated. I forget what the number is. I want to say a couple hundred tons. I know the Bank of India, and both, the Royal Bank of India and and the Central Bank of Poland have both been repatriating their gold out of London. And the reason I was surprised by that is politically, I've always considered that India and Poland were lapdogs of the U.S.
Well,
India certainly has been
India
flexing a lot. Certainly has been flexing a lot more independence from the U.S. Um,
India's never been fully in the US's corner. I mean, like the Indian government, like for many decades, was more like socialism and more aligned with the Soviet Union and Russia, especially like for their economic policy, for their energy deals. Although a lot of Indian citizens do, immigrate and come here to the United States for more economic opportunities. India kind of, balances like going back and forth between the U.S. and Russia off each other. So India kind of they play both sides.
right. Well, and they are a member of the BRICS and also the Shanghai Cooperative Organization.
Oh well, India and China don't get along very. There's like border disputes. There's small little border skirmishes all the time between the Indian and Chinese military. They do not get along very well at all.
I'm just saying they're a member of the BRICS and they're a member of the Shanghai Cooperative Organization. So, you know, I don't. Who knows what the border skirmishes are about?
So, in terms of the U.S. economy, commercial real estate, the banking system, do you think the banks, I see a lot of treasuries that have to get sold, in the next 6, 12, 18 months that have to get rolled over at a higher interest rates. Who do you think is going to buy the treasuries if Trump is threatening these countries with tariffs and retaliation? And do you think the U.S. is the banks are in a dire strait here with losses on treasuries and real estate?
Ooh, that's a good question. Um, Honestly, I don't know. I don't know when they have to start rolling further out on the yield curve to fund the the treasury, the government spending deficit. I don't really know who's going to pick up the slack there. Obviously China's been they've just reduced their treasury holdings as a percentage of their reserves to, and actually not nominally, to like its lowest level in decades. I mean, even Japan has been reducing the amount of treasuries that it holds. So I, I think if they let the rate go high enough on the longer end, I think they'd be able to attract enough demand to fund the treasuries.
Well,
But
some, I mean, foreign retail investors, because what on a relative basis, the dollar is relatively strong, and then there's a relatively higher yield on U.S. Treasuries than other foreign bonds. So you've gotten some demand, from high net worth foreign retail investors into Treasuries, but is that really sustainable? Because like normally in the past, or the last couple decades, the foreign central banks have been subsidizing the U.S.'s budget deficits.
well, that's foreign retail demand is not going to make up for the gap that would be left by foreign central banks.
Yeah, I
I
agree.
think even the OPEC countries, at least Saudi Arabia, have been reducing the amount of treasuries that they hold. So I I don't know. I
I
think
think they'll
ultimately what's going to have to happen is the Fed's just going to have to resort to some form of QE. I doubt they'll call it that. It'll be under the disguise of something else, like the 2019 repo program that started up in September that year.
Oh, you think they'll hide the treasuries like off balance sheet or something? What in a special purpose vehicle?
Well, I
Where
don't
like
know about that because they're going to have to print money in order to purchase them. So I honestly I don't know. It's going to be fun to
well,
watch unfold.
the money supply in the commercial banking system has been rising. My educated guess, Dave, is that these commercial banks then they're creating money supply. They're not loaning out into the real economy. The loans are going to the U.S. Treasury. That they're creating currency out of thin air with fractional reserve banking, and then they're buying Treasury. So they're starting to stuff those extra Treasuries into the commercial banks here in the U.S. But then they have to change the accounting laws because they have losses on the older bonds because the interest rates haven't come back down.
Well, it's not just the commercial banks that are creating, um, call it credit currency. I mean, quietly, M2 is almost at an all-time high.
Really?
Yep.
That's shocking given like the state of the real economy and how like a lot of consumers are trading down. I mean, I see regular people all the time where their incomes haven't grown talking about like stagflation, shrinkflation. Like there's like videos now of people comparing like portion sizes. Like people are waking up about inflation and stagflation and shrinkflation now.
Well, I mean that I'm looking at the chart right now of M2 and the all-time high is 21.7 trillion in March of 2022 and it's risen now to 21.5 trillion. So that goes a long way to explaining, why the stock market has been melting up this year, and also why inflation, even as the various highly rigged official measures of inflation, like the CPE, like the CPI or the PCE, that explains why they're showing higher levels of price inflation. I mean, obviously, the real level of price inflation is much higher.
Yeah, I agree. I mean, the real inflation rate's way higher for a lot of things like food and healthcare insurance and all types of insurance really are way higher than the consumer price index suggests. The other issue here with the Congressional Budget Office, I mean, they claimed that the budget deficits were only about 1.8 trillion. I think like in 2024, there's no way. I think the Biden administration spent about $8 trillion dollars. I have the budget deficits, Dave. There was, I think, a record high tax receipts, almost about 5 trillion. And so the budget deficits were actually closer to 3 trillion before Biden left. That's like absolutely insane. I mean, it's not sustainable. So like you don't hear you hear like the mainstream media and the Democrats now they're blaming Trump for all the inflation. He's been here a month, but like that's an absolutely insane amount of government spending, like $8 trillion in a single year. Whew.
Well, and it's, the when you issue debt like that to fund spending, it's inflationary.
Well, especially if like all like 20 billion here, a billion here, 2 billion there, 20 billion here is being stolen and put into slush funds, or the money is being raided out of Social Security on waste and fraud and corruption and abuse. Yeah, the taxpayer's not getting any return on investment. It's negative.
Well, but I think I just saw the stat the other day. It takes $5 of government spending to generate a dollar of GDP. So that by definition is inflationary because what's happening is when you issue debt, it behaves and spends like money until it's repaid. The problem is the US government never pays it back. It's always increasing. And so it's basically the same thing as printing money. And that's a big part of where uh, government debt issuance is inflationary.
So now I want to transition to gold stocks with the remaining part of the interview. We're a little under $2,900 an ounce. The last couple weeks with the quarterly earnings for Q4 2024, we've actually had some surprise free cash flow beats for Newmont Mining, Barrick Gold, First Majestic Silver. Do you think we're going to see more mergers and acquisitions as some of these larger mid-sized gold and silver miners start to generate free cash flow and then they look around and see cheaper assets?
I think so. I mean, I in my mining stock journal, I cover a handful of mid cap producers and the reason I cover them and recommend them is because I think they're very undervalued relative to their peers and relative to where they should be valued. I mean, the merger between Calibre Mining, that was one of my um, more adamant picks as a value stock in the sector, and they just essentially got acquired by Equinox Gold. So yeah, I think I think we could start. Goldfield's probably going to start flexing its muscles in M&A. Anglo Gold Asante probably will. Eldorado Gold. But I think we will see that. But what I'm more interested in seeing is when they start acquiring the junior project development stocks before these companies get fully de-risked, by having a mine constructed and ramped up. So, and we have started to see there have been some acquisitions of junior project development stocks companies, but they've been fairly far along on the de-risking curve.
There's been a lot of
Back in
mergers of the smaller producers too. Like, so there's been a lot of mergers of smaller one mine producers the last 6 months because not as much capital is available. So they're trying to make what larger mine companies with two or three mines instead that are producing for
Well, if you
diversity.
look at like Heliostar, they bought two producing mines from Argonaut, well, the old Argonaut. And they did that because they'll be able to generate cash flow to advance their much bigger project, Ana Paula, without having to issue shares. I mean, they just released the results for um, it's their fiscal it's their fiscal year third quarter, but for the quarter that ended in December, and those two mines generated 9 million in cash flow. Integra Resources bought the Florida Canyon mine, which at one point was also owned by Argonaut, and they did that for the same reason. They have a much bigger and a very lucrative, potentially lucrative project, gold/silver project in Idaho, and they bought the Florida Canyon mine in order to produce gold and generate free cash flow, so they don't have to issue shares. So that what I think that to me is the more fascinating trend in the industry right now are these junior project development companies that have great projects and they're finding ways to slip into gold production to create cash flow to fund their bigger, more lucrative projects.
You said they can't
Raw
issue
Gold is
equity.
is a good example of that. They've got an at slash near surface deposit on their property. It's actually it's three deposits now, and they're going to start, if everything goes smoothly, they'll start producing gold from that thing sometime in 2026, and that'll generate the cash flow they need to get their much bigger, higher grade project developed without issuing shares. I mean, the stocks of these companies are so depressed right now, and fundamentally they're very undervalued versus their upside optionality. That it forced them to look for ways to get creative to fund their projects without having to issue shares at these ridiculously depressed levels.
I was listening to an interview with Ross Beatty after he talked about what the merger with Equinox Gold and Calibre, and he was talking about how like a lot of these juniors that either they want to build one mine, they can't raise the capital to build the mine on their own. So we're going to see then those mid-tier miners that you're talking about with free cash flow, they're going to start doing what joint venture deals, partnerships with some of these juniors to where they fund the exploration, they fund what the feasibility study, and then what it's a 50-50 deal similar to what Goldfields did with Osisko Mining, the Windfall project in Quebec where Goldfields had a 50-50 joint venture and then they just decided to take the whole thing over eventually.
Yeah, absolutely.
So
And
you
I
expect
agree.
more of that
I
there.
think we could start to see the mid caps start to acquire the juniors. The problem is a lot of these mid caps, their stock prices are, again, they're ridiculously depressed relative to where they should be. So silver
The
core
market doesn't
metals
buy the market doesn't buy the free cash flow, right? So the market needs to see more quarters of consistent free cash flow, either
I,
maintaining the free cash flow or growth in free cash flow.
I think that's part of it, but part of it's also a misunderstanding of jurisdictional risk. Like with Caliber, that their gravy train is in uh,
Don't they have a big mine in Canada? Is that one under construction now?
no,
And they
that
have
one's under
one.
construction. That's the Valentine mine that they acquired by acquiring Marathon. They operate in Nicaragua. So and Nicaragua, and I didn't would have never thought this until I started looking at Caliber and doing the research on it. And Nicaragua is probably easier to get a mining license there than it is in the United States. It's a very mining friendly country. So,
Yeah,
uh,
that's something Trump needs to fix. I mean, like there's good copper and gold deposits in Arizona, Nevada, California, a few in Alaska, and some of them can't get permits. So, I mean, like hopefully a Republican controlled Congress, Trump in the White House the next couple of years will fast track some of these things. I'd like to see more domestic mining production of copper and gold and some of the other major metals here in the US.
well, I think he can fix that issue at the federal level, but I don't know about at the state level, right? So you've got with these mine projects, you need state operating license, and if any part of the project's on BLM land, you need federal operating license. So
Okay, so
and
BLM for our
environmental
list.
licenses. So I think, and if you look at the big mining states, I don't know where Arizona stands politically on the environment, but California, wow. I would never invest in a mine project in California.
I mean, California has a lot of potential, but yes, like the problem is politicians, bureaucrats, environmentalist lawyers. So, like the geology in California is good. They have lots of oil and natural gas deposits off the coast of Santa Barbara, and they, I think, have the Monterey Shale field around there too, like on land. Those things are not going to be developed, so they're going to be blocked.
Well, there's some potentially lucrative gold projects in California and some companies insist on continuing to advance them, but good luck getting an environmental permit in California.
Yeah, Equinox has one smaller mine, Equinox Gold does, but it's not one of their major ones like Greenstone or anything like that. But yeah, it's just really sad for some of these other states like Arizona. Like Arizona is normally a fairly pro business in a lot of the state, and yet like some of these copper and gold mines that are right next to other copper and gold mines have been blocked for 10, 15, 20 years.
Yeah,
I think it's resolution.
amazingly, Paramount Gold, 'cause people wouldn't have thought this would happen. And again, their stock is ridiculously undervalued. And again, I think it's because people just don't understand the jurisdictional risks. But Paramount's already received their operating permits from the state of Oregon and from the county that they're in. They're just waiting for the BLM to turn around their federal permitting.
And for our listeners out there, when Dave says BLM, he means Bureau of Land Management. Now, the other junior that you were talking about with a couple of projects, what was the name again? I think it got the noise got canceled like 2 minutes ago.
Cabral Gold,
Yeah, Cabral, you said?
Cabral Gold, Heliostar, and Integra Resources.
Okay. I think we're also starting to see some deals in the silver side, Dave, which is kind of surprising. Silvercrest, was their main mine very large? I know it was high grade. Were you surprised that Coeur d'Alene bought something like that?
No, I'm not. That was, I believe, after Aya Gold and Silver, which is it's the only publicly traded pure silver producer. I think Silvercrest Metals has the second or third highest, and maybe the second highest um, percentage of their revenues derived from silver. I mean, a lot of these companies, Core being a good example, although the Silvercrest deal will change the numbers, but a lot of companies that were previously primary silver producers, the amount of their revenues that's derived from silver as opposed to gold and base metals is under 30%. I mean, Hecla was under 30% until they acquired that silver mine in Alaska. I always space out the name. Um, Pan American Silver, I mean, they bought the gold mines in Canada, and I think they may have made some other gold mine acquisitions. I mean, their revenues derived from silver are under 30%. Fortuna is under 20% now. So,
Well, the margins for gold mines have been better for the last, what, 7 to 10 years. It's just been easier with the profit margins to consistently make better profit margins with gold mines. So they kind of had to go buy gold mines out of necessity. Now, if the silver price is uncapped and we start to see rallies, what in the silver price, if the silver price doesn't go back down below $25 an ounce, I mean, you're going to start to see more investment into more silver supply.
I think that's part of the thing is diversifying your revenue base away from silver. But also, I mean, there's not any low hanging fruit in terms of finding good silver deposits. So that's a
Well,
big part
yeah,
of the problem
especially.
is scarcity.
Well, especially high grade, low cost ones, because like a lot of the silver deposits that are going to go into production in the next 5 or 10 years were discovered in 2010, 11, when people were flush with exploration budget cash when the silver price was last at what, $48 an ounce. So you had discoveries, but then a lot of those mines that they found for a couple 100 million ounces, they needed like 30, 35, $40 an ounce silver though.
You must be referencing mostly the project silver projects in Mexico.
Yeah, yeah. Well, those are the
Yeah.
massive ones. I mean, like, how many massive? There's not many massive silver deposits left. You have La Navidad in Argentina, a few in Mexico. There's not a lot of massive silver deposits left.
Yeah, the Navidad one, that'll probably never get developed into a mine because that province in Argentina strictly forbids the use of cyanide, and that's an open pit mine. And you need cyanide to get the silver out of the ore. I remember when Pan American Silver bought that because we had a big position in Aqualine. I think it was either Aqualine Resources or Aqualine Silver. And I invested in it and had a huge position in it because it's as it's a 700 million ounce deposit.
Probably the world's
Um,
largest, yeah, in highest grade
and
left.
I
Yeah.
and I honestly thought that eventually that province would capitulate on the cyanide thing, and I'm assuming that Pan American Silver probably thought they could get in there and maybe hand out briefcases full of cash and get that law changed, but no chance. That thing's been on the acquisition happened in 2009, and that project's been on care and maintenance since 2013, I believe.
Wow, that is bad. A waste of funds right there. If you speak to Rick Roll, I mean, he says that it doesn't have anything to do with the cyanide permits or whatever, that the family that controls that province, like Pan American Silver, wasn't willing to pay them enough funds. So the briefcases of cash, they wanted extra briefcases of cash if you speak to Rick Roll. Now, I
I
don't.
think it's the cyanide because that's the type of thing that would have to be taken to a public vote.
Oh, he made it like a really rich and powerful family controls most of the government there in that province.
You still have to an issue like that. You got to take it to the people.
Well, I mean, Malay is there now. You'd think Malay would start fixing this stuff. He has like a huge tax break thing in Argentina because I think Argentina is mostly pro mining now, especially for investment. If you invest, what is it, 500 million or more in the next couple years, I think by the end of 2026, there's a huge tax break, I think, for that type of investment into Argentina. So the miners like copper, gold, silver, they have some huge benefits if they make invest in projects, move them forward in the next like a year and a half, 2 years.
Yeah, that's probably great for projects outside of that particular province. It's called Chubut, I believe, is how it's pronounced. So,
So
you
there's not
know,
many shovel-ready silver projects then, if that are what high grade, low cost, pretty close. That would be economic at the current silver prices.
well, there's Discovery Silver's Cordero project in Mexico, and they're just waiting on getting awarded an pit mine permit down there. So, and I think it will happen.
Which province in Mexico is that one in?
Oh, can't
It's
remember.
it's not like in Sinaloa or Juarez.
No.
Okay, because like there's been some games with some of the Mexico. Like I know there was a panic when the election happened. What last year that what the open pit mines were going to get banned with the
It's
permits,
in
but
Chihuahua. Chihuahua is very mining friendly.
okay, yeah, yeah. Chihuahua is a massive state, so it's most.
Yeah, no, the government's going to hand out open pit permits. They just want to make sure that the mine is constructed and operated in accordance with their their view on environmental standards. So one of the things Discovery is going to do is they're looking for land right now to put up a massive solar farm, and they'll power the plant with solar energy, and that's the type of thing that appeals to Scheinberg and the new Semernaut head.
Do you think that the producing gold and silver miners, so the ones that used to be primary silver miners like Coeur d'Alene and Hecla, and then throw first Majestic Silver in there, are these like good swing trades for the next year or two if the silver price stays at these levels or go higher? Or do you think that these businesses are going to run into problems soon again?
I mean, I can't speak to First Majestic, but yet, I mean, yeah, and I mean, it probably even applies to First Majestic. I mean, when the price of silver rallies, all of these stocks, even the ones that were formerly primary metal producers or silver producers, but no longer are, those stocks, I mean, retail just piles into them.
Yeah, I mean, they've had good earnings with the last couple weeks. So you had surprise beats from Barrick Gold, Newmont Mining, First Majestic Silver, that they've actually kept their costs under control and they beat what on profit margins and free cash flow. So some of those shares are starting to perk up a little bit that they have not, even though the metals prices are higher. But really, for more people to get interested, what some of these other asset classes have to not go up as much, and the miners have to start consistently beating their earnings guidance more. Do you think?
Um, that's a good question. I think that a lot of investors, because at the margin it's retail investors that move the needle on the mining stocks. I mean, especially the smaller cap ones and the juniors. I mean, if you look at the large caps, they've had, the largest stocks have had great performance. I mean, look at Agnico Eagle, and that's because they have massive liquid, massive liquid shares outstanding, and it allows in big investment funds to invest in them. I
Well,
mean,
Agnico
when
also owns the two best low-cost mines in Canada, what in Canadian Malartic and Detour Lake. So I mean that's a huge advantage. And what the other top gold mining stock is what Lundin Gold, which owns what the other low-cost one. Yes, it's in Ecuador, but it's also probably the best one in terms of profit margin.
Yeah, but the large cap mining producers, big funds can move money into them. I mean, if you listen to um, uh, Drunken Miller, when he says he's investing in miners, the only ones he talks about are Newmont and Barrick. It's because they're large, liquid, and easy to trade in and out of. And that's to a degree that hampers the price performance of the smaller cap producers and the juniors. I mean, if you take a company like Cabral Gold, I mean, if a Fidelity generalist fund decides that it wants to start allocating money into mining stocks and wants to look at juniors, which they did back in the 2008 to 2011 run, they a big Fidelity fund would have to buy the entire company in
Well,
order
or
to in order for the performance of the stock, or almost the entire company, in order for the performance of the stock to have a measurable effect on their NAV if it does well.
Well,
So that's
Fidelity's not going to do that though. I mean, Fidelity's what going to buy share units of GLD, and they're going to buy what a lot, 10% or 20% of the gold miners ETF probably if they don't buy
no,
individual
they'll buy
shares.
individual mining stocks. They want performance. They want alpha. You're not going to get alpha in GDX, and whether they buy GLD or not, that's their problem. But um, what I'm saying is that's the factor right now. The factor that's hampering, especially the junior project development stocks, is that retail piled into these things between 2016 and 2020 and got burned. And so, they're still busy, so they're gun shy right now when it comes to investing in the sector. And they don't care if they're gun shy. They're making money trading Nvidia calls and things like that. And so I think one of the things we're going to have to see is the tech bubble is going to have to pop. And then to the extent that there's speculative capital left over at the retail level, they're going to turn to the juniors again.
Especially if the US government panics about what the banks with commercial real estate or starts monetizing more of that treasury debt with balance sheet expansion and quantitative easing. Because I think you laid out that there is inflationary pressures, just the average person doesn't really figure it out yet. Americans are not really buying gold. The majority of the demand for gold right now, for physical gold at least, is from the Asian retail investors and non G7 central banks. And so there's even less demand for gold stocks right now. But you brought up like the gold stock ETFs. That's an interesting point because you cover juniors. So the juniors that are not in those gold mining stock ETFs, right? It's harder and harder for them to raise capital, and it's easier for the companies that are actually in the ETF.
I'm sorry, say that again.
Would you say that the juniors you cover, if they're not in a gold mining stock ETF like the GDX or the GDXJ, do you think it's harder for them to raise capital than a mining company that is in one of those mining stock ETFs?
I don't know about that. I think it's more a function of, because the ETFs aren't injecting capital into the companies. The ETFs are just buying the shares.
Well,
To,
they juice the market cap if there's demand for the ETF, right? So they juice the market cap. So it's not direct like you said, but it's like indirectly they could juice the market cap value of the company a lot. Now it's not normally with the gold miners, but other sectors at least.
yeah, no, I mean, again, I think that the large caps are performing like we would expect them to perform, given what gold and silver have done. Maybe not quite as haven't moved. We haven't seen the blow off cycle yet, the blow off top cycle in the sector. We still have that ahead of us. And so you've got, you know, to the extent that there's big funds besides dedicated gold mining stock funds investing in these companies, they're just going to buy the big ones, and there's a handful of, like, smart money guys running family offices that are investing in this stuff. So, the juniors' time will come. That's still ahead of us. I'm actually glad we haven't seen the juniors go crazy yet, because that's usually the sign that the end of the bull cycle is coming. We saw that happen in 2016, where the GDX, I forget how, I think it jumped like 50% in 8 months, and there were junior, junior project development stocks that tripled to quintupling in that same space. And that was a short-lived rally. It lasted 8 months, big deal. And then the same thing in 2020. That one only lasted 6 months, but you had all this speculative money flood into the micro caps, and I just looked at that and I'm like, this isn't a good sign for the sector. What we're seeing now is a great sign for the sector. You've had, gold started taking off in late 2022, and then you had silver start to take off. You've seen the mining stocks, the large caps, those have performed well. I mean, GDX.
I just pulled it up. Yeah, it's at $39.72 for one share of GDX. I mean, that's way below the 2011 highs, like $64 a share.
Right, but I mean, it's up. It's been performing since October 2023. We haven't really seen any performance out of the junior micro caps, which to me is a good sign. To me, it speaks to the sustainability of the bull cycle that we're in right now. So,
In terms of mining companies, new mines, are there any countries where you think investors where the geopolitical winds have changed and investors should start to avoid now that used to be pro mining?
I don't know. I mean, if anything, I've expanded the number of countries that I'm willing to invest in over what it was, say, up until 2020, 2021. So, you got to just look at each individual country and do the work, or subscribe to a newsletter where the person who writes the newsletter does the work. So, I mean, I looked at Nicaragua, you know, from 10 different angles before I started investing in and recommending Calibre Mining. Um, I wasn't looking at West Africa until Fortuna bought um, Rox Gold, and Rox Gold had two operating mines in West Africa, one in Burkina Faso and one in Cote d'Ivoire. And I actually went over and saw their mine at Cote d'Ivoire. I was there for the first gold pour, and you learn a lot, but when you do something like that. But again, I wouldn't invest in a company that is building or is a single mine operator in Burkina Faso. And Fortuna's Burkina Faso mine, doesn't have a much long, a very long mine life left. So, but there's plenty of countries in West Africa that are way more mining friendly than the United States. So,
Oh yeah, and they don't have environmentalist lawyers spending like tens of millions of dollars trying to block every single mine and delayed in the courts for years.
right, exactly. So, you just when you look at jurisdictions, you got to take it on a case by case basis.
Well,
Um,
yeah, Africa has great geology. So, I mean, like the permitting process is way more efficient in Africa. The issue like is if the government has what a coup d'état or regime change or a new warlord come in. Because was buying shares of Lundin Mining. Remember the copper company that the Lundin zone. I mean, the shares crashed like in 2008. They were bringing on a new mine in the Democratic Republic of Congo. I think the shares crashed from like $5 down to like 10 cents. Everyone was expecting bankruptcy. I was like, it's like 10 or 20 cents a share. And I bought like 500 shares. I wish I had bought more. And I got like the shares went from like 20 or 30 cents up to $5 before I cashed out. So there is huge opportunities there if you do research, like you said, with the country and risk and reward. The company turned around. China announced what a huge QE program and all the infrastructure. The copper mine came online and they printed money.
that's great.
Well, I mean, like Africa has tons of great copper and gold, like Ivanhoe Mines. So I don't know if they're a copper miner, but like Ivanhoe Mines has like these great projects for the platinum and gold mine in Platreef one that's under construction now in South Africa. That's going to be all mechanized. They have like Japanese robotics manufacturers that are building like a mechanized mine with solar panels on the surface. Most of the mine's mechanized, and then like they have a huge copper mine, I think, in one of the other African countries too. So there's like huge geological potential in Africa. It's just like the US, like it's so difficult for for a lot of these size, even a medium size like copper mine now, copper and gold mine in the U.S. Like the permitting is so difficult, even in Nevada.
Unless it's an individual state, U.S. Gold. Their CK Gold project is copper gold. It's in Wyoming. It's on the smaller side, but they just they got permitted in Wyoming without a problem, so without a hitch. So they're just working on a updated feasibility study so that they can get financing to build the mine.
Oh, I'm talking like a sizable one, say like a Anglo Gold Ashanti with the Silicon or Merlin deposits, or Barrick Gold and Newmont want to build an extension what to one of their they have a joint venture one that a Robertson mine that's starting construct. I think they just got the permits in the last few months, and they're going to start construction on that expansion in Nevada. That's like a 50-50 joint venture between Barrick Gold and Newmont.
Mm.
But like the permitting process on those things, like those companies, like that particular deposit, they were fighting for years over that, over who owned how much and the permits. It was just a disaster. Like they should have built that thing from listening to other experts. They should have built that thing like decades ago, and then now they're building. But overall, I mean, like I think the gold and silver miners they have an opportunity here, Dave, with the metals prices where they are. I mean, unless the management teams go and screw this up, they go and buy a mine that like Barrick Gold buys a mine what in Mali, and then like it gets shut down, the government takes it over, or they go and do a bad deal. I mean, they have a good opportunity here, don't you think, to make some really good profits and free cash flow, maybe grow dividends, buy back shares if they're cheap, do some acquisitions. I think these are like really good tailwinds right now. I was gonna say headwinds, but tailwinds.
Yeah, I agree 100%.
Yeah, so it's just about then the question is, are we going to see bad deals?
Yeah, of course we are. That's the way securities markets are.
Well, I mean, like, look at the share price, look at the max charts. This is why you do not buy and hold what Barrick Gold and Newmont Mining for long periods of time. Go and look at max charts. I think one of my guests in the last week or two said that like the max chart on Barrick Gold, the share price is back to like 1995 levels or something. So it might have had a little rally the last like year and a half, 2 years, but overall the last like 10, 15, 20 years has destroyed shareholder value.
Yeah, no, I don't. I don't even. I've never invested in Barrick or Newmont, and I don't even really follow them. I think they're large, big corporate bureaucracies, slow moving, and not really well managed.
Well, they just fired a bunch of their six-figure Newmont Mining, right? They just fired a bunch of their six-figure DEI middle management people.
Yeah, you got to cut costs.
Well, they went woke, but they didn't go broke. But they had a share price problems for a while. Unlike our government, which just like was like hiring all these people nonstop for over 100,000 DEI hires.
Yeah.
Okay, well, Dave, I want to thank you so much for your time today. If my listeners want to check out the Mining Stock Journal or the Short Sellers Journal, how do they do so?
My website is investmentresearchdynamics.com, and there's links at the top that'll kind of tell you all you need to know about both newsletters. And I also have a Substack now. You can find it under the name the Mining Stock Journal. So, and a paid subscription to that includes a subscription to my Mining Stock Journal.